The broadcast is now starting. All attendees are in listen-only mode.
Hello, Warriors. Day before NFP. I'd like to welcome our viewers at investing.com that we're being streamed on today. So, day before NFP, not a big day for me for making commitments. I have a few thoughts. So, yesterday we talked about it was turnaround Tuesday, got a little pop in the dollar. Thought that could happen. Today, it was just a scalp, and I think that's all you want to do in this environment right now is just scalp around. Still very possible we could challenge these lows, make new lows. In fact, that's almost my preferred scenario, but it's starting to take some time. Maybe this is a little head and shoulders right here, but into NFP, like everything could happen. It could do this, it could do that. I'd rather react to the news tomorrow instead of make a roulette bet. Something that did manifest in Aussie, I was talking about looking to sell a third drive up at 81.5 to 82. But I did point out this 200 moving on the one hour, that it was really a great line for maintaining the uptrend. And if it took it out, it'd be ugly. And that's what happened at about 80.50-ish. So any rallies back to 80.40, 80.50 on further dollar weakness, I think there's more left. We could be looking at 78.5 or so, and that would just be a pullback. Here's a 200 on the 400, 78.75. So Aussie looks pretty vulnerable to me. And maybe this is why we get a pullback in gold to about the 1310 level as I correlate commodity currencies, the Aussie with gold. So here's gold. Down again today. So I'm thinking down around here, maybe we get some type of ABC down towards 1310. Because next time through, our guest yesterday thought it would be a false breakout, but to me it looks like it could be a very explosive breakout back over 1365, and the measured move is pretty close to $300. So classic technicians would say, 1650 would be the measurement of this. So I also want to talk a little bit about stock index futures. If you'd noticed the last few days after the State of the Union speech, they sold into it, took it down. This is your weekly, not quite a 2-week off number. But the action's kind of changing. Last night we were up pretty good. There seems to be more selling into strength going on, although this could be a third drive. And the S&P was not my preferred short. So you guys have been hearing me talk Russell. Steve, look at the Russell. Because I've told the story before that if you're on American Idol and you're a singer, the most critical choice you can make is, what are you going to sing? It's your song choice. And for us, it's trade selection. So this kind of goes back to shorting the weak sister when it rallies and buying the strength when it pulls back. But Russell RSI structure compared to S&P, this is the 1 hour. I'll just give you even a daily look. So as you can see, we've had a few divergences, right? This was our confirmed high back here in October. It's still a little bit too high up here, 73 reading at this peak. And then we had another one a little over 70. And then this recent one that we had last week before it came off, 70. We have a reversal week to the downside working now. But I just want to show you the difference between the RSI structure of that compared to like the S&P or the Dow. So just remember, we had readings under 70 here, whereas the S&P, look at this reading, okay? So even though I was a little bit early in Russell, okay, it was more forgiving because I did it right around here and then the S&P continued to accelerate, and the Russell made a new high, but it made a marginal new high. So just like you have to pick the right song if you're competing in a singing competition, your trade selection's everything in this business. In fact, you could be right about a dollar rally and get long the wrong pair. That's why, we talk about euro pound for preferred longs and shorts, and look at the spreads to, identify what the strength and what the weakness is. So here's my longer term look in Russell. So here's your daily. We diverged. What's it look like to you? Say I had a flat top above here. What would you call it? A rising wedge. That's correct. What's the rule for rising wedge? 38% retrace, 61.8, or is it possible for 100% retracement? And then here's my my target is a broadening formation. You'd have another line here. It's like a megaphone broadening formation. But anyway, this is only a 15% move. If I go out to my week, and I'm not looking for this is off the table for me. The weekly is also giving a two-week reversal. This is a larger megaphone on the weekly. I'm not looking for this bottom line here. So, but this is nice. This would be a nice trade if it manifests. That's my that's my target. So maybe we get 10% off from S&Ps, takes us back to 2,700, and maybe we get 15 or better in Russell. So hi, Oscar. Oscar's joining us today, our special guest, and at Yogi Chan canceled from Rand Squawk. And, I just went out on Twitter and saw Oscar tweeting about crude oil and just asked him if he'd be interested in doing an interview. And he has no axe to grind. He doesn't have a service. He just trades. So stick around for Oscar today. Independent trader, not trying to sell you anything. And we're going to be talking about energy and what he sees live from Turkey. So everyone kind of know where I'm at. The stock indexes are trading a little differently than they have been. And anything can happen in the dollar. I would almost prefer it making a new low than going from here. And then lastly, we were talking about how well Canada was holding up yesterday. Blake was talking about it. We were talking about relative strength compared to the dollar, and still could be putting in a higher low. There's all kinds of glaring divergences here on the 4-hour. So, a lot of the stuff is saying, Aussie breaking down, Canada trying to come out of the hole, that the dollars are not going to make a new low. So I see cleaner things in the individual instruments than Dixie. But also keep in mind, for the last time, everything and anything is going to happen after the NFP, except, they really haven't been as wild lately. So, maybe we can readjust, and if we have positions, just hold them into the NFP. I'm trying to remember how they used to be so wild, and there'd be air pockets everywhere.
Hey, Dale. Good morning.
Yeah, well, haven't they kind of lost some of their impact, Blake? Am I imagining it?
No, they have. But the thing is we have what many economists would say is full employment. So our employment numbers have been very steady, and record low on a record low unemployment. Our unemployment rate is they're at levels where the market doesn't get concerned with it. I think it's when right. we start decreasing the amount of jobs that are being created, and it doesn't look like this month is going to be that, because if you saw the ADP number that came out yesterday, it was a strong number. So it looks like that once again we're going to have fairly strong employment. We're going to have, a good number, and it's not shaking the trees. Everybody's just going to walk away, go, okay, that was a good number, carry on, and all is good. But it's when those numbers start to soften or really start to accelerate where we start to see extreme job growth. Like if we start to see, us creating 400,000 jobs a month, then you start to talk about an economy that's getting really hot and where the Fed needs to play a little catch up. Or the flip side is we start not creating as many jobs as we should be, and we're not hitting expectations, and then you're going to see something completely different. But right now, I mean, we've been creating 150 to 250,000 jobs every month for as long as I can remember. I mean, it's not really, but you know what I'm saying. It's been going on for quite some time. And matter of fact, let me see here. I'm just going to. I know I don't have the screen yet, but I'm just looking. I mean, we had 1 month in October where we had a loss, but really, we've been creating for since 2000, really since 2011, we've had really good numbers for the most part. And here, I'll just show you that this is like probably one of the best.
Was there anything fundamental behind the decline in Aussie last night?
Building approvals were a little
nothing.
Little weak. Yeah.
It was just a market because it's more bearish if it didn't have a reason.
Yeah, and I mean we saw, I mean, Chinese manufacturing came in line, building approvals came in weaker than expected. But I think the Aussie was more of a culprit of just I mean, we really started to break down. I mean, it just we cracked this channel. I think is more technical than anything.
Right.
Cracking that channel. Now the risks for the Aussie is more of a big double top and false breakout and that type of thing. So and we should all be paying pretty close attention to that regarding the Aussie, because that's a pretty big development in my opinion.
That's why I brought it up. Yeah.
Yeah, I mean,
we got one more stab up there, remember, yesterday, but never manifested it. And where you have your channel line, there was a 200-day just like holding every dip. It just came right off on the 1 hour, the 200.
Oh yeah, there's like that 1 hour. Yeah, we were just really
that's almost like a trend line. It acted like a trend line all the way up.
It really did, and that 200 period moving average on the hourly was really holding us up, and then we cracked through it, and then and I had an Aussie short and I closed it. I was out with some friends that were at the Phoenix Open last night, and I met them out for some drinks, and I closed the Aussie short like right here, and I'm like, I got up this morning, I'm like, oh, you got to be kidding me. But c'est la vie. It happens. I wanted it kind of off my screen so I didn't have to pay attention to it when I was having dinner last night. So but you can see the Aussie, it really is, it's kind of breaking ranks.
I mentor people and coach people like not to drink and trade.
Yeah, it's not a good idea. It's not a good
tip. Is that a good tip, you think?
I think it is. But yeah, so the Aussie, the Aussie has broken down through this support. Now, the thing that the Aussie has going for it, if you're bullish, is the dollar is still extremely weak. I mean, if you look at the euro, I mean, we're nudged right up against triangle resistance here. The pound is still extremely strong. Look at the cable. I mean, look how strong the cable is. Cable's still strong. The Kiwi's still holding up. The dollar Canadian, it is still divergent. And matter of fact, Paul Franco, SPZ trader, he called it perfectly on this 78% retracement down here. And we hit it and reversed following the Canadian data yesterday. But the Canadian still, we've got this downtrend line in play. The Swissy still trading heavy. The Norwegian krona, strong Norway PMIs overnight, so that thing's still capped. US dollar, Swedish krona, there was some strong Swedish data overnight. I think there were PMIs as well. That's still capped. So if you're bullish the Aussie, I mean, the good news is the dollar still looks weak against most things. Now I'm going to talk for a moment about yields, and one of the things that you see stocks that are starting to show some signs of weakness. It's important to understand that as yields continue higher, that this is going to become more and more of a headwind for equities. And that is, if you're long stocks, that should be, something that you're taking into consideration now. That yields continue to rise, and as yields continue to rise, that really is, and you got these yields that are moving up like this, that is really going to be a big risk to stocks, and stocks are going to start to feel that pinch, in my opinion. So, I think you have to be very careful. If you're long equities, you got to be really careful at this point. And with yields rising the way they're rising, it is starting to catch the attention of like the dollar yen. The dollar yen, one of the reasons why the dollar yen is so strong right at this moment is because yields are moving higher. Now, I think the yen is going to be really tricky, because if yields continue to move up and stocks move down, the dollar yen is going to be kind of at a stalemate. But if yields continue to go up, it should benefit the US dollar. And you have to think about that as the dollar is in such depressed areas. Now, you'd also mentioned, I don't like to do a lot before non-farm payroll. I 100% agree with you. Trying to trade ahead of non-farm payroll, it's going to be a little difficult. But at the same time, we should be careful that the dollar, ahead of non-farm payroll could potentially get a squeeze. And we just came off of a really weak month. There was a lot of dollar selling flows, even yesterday. And then after the market, the London fix, the dollar actually rallied yesterday. Okay. Right here, you can see the dollar kind of spiked up yesterday. So a lot of these dollar selling flows may be getting out of the way. Okay. They might be out of the way. And so if the dollar wants to rally, like get a squeeze ahead of the non-farm payroll, where people just maybe some position squaring, that's entirely possible as well. So, just some things to think about as we move into, a brand new month, the month of February, and get things rolling. I mean, it's been a roller coaster month for a lot of asset classes, but the dollar has been extremely depressed. And, the dollar, I think it can move lower over time, but as I've mentioned to you guys every single day, I don't think it's going to be a straight shot. And we could start to see a little bit of a messier move at this point in time. But I don't think the dollar is going to make any huge strides ahead of non-farm payroll, but I think it could be a risk for today. We're starting to see equity markets are coming under a little bit of pressure here. Here's the S&P, and what this is, we just talked about the Aussie breaking out of its channel. Well, the S&P broke out of its channel 2 days ago, and that's something that we should take note of, right? You have equity markets that are, they were up. Let's look at just for this year, okay? In January, just 2018, we're up almost 8% in the S&P. Okay, up almost 8% in the S&P, and now we're starting to give back some of those gains. And there's, like I said, a risk. Wow, equities are really pulling back here. There's a risk that that they can continue to pull back as yields are so strong, and So if you're long equities, you got to be thinking that as well. And what we also can see, and this is another thing that might happen too. Whoops, here's the bond market. Okay, this is the 10-year, right? And this is not yields. This is actually the 10-year bond market. You can see we have a little bit of a descending wedge here that could, actually start to show a little, we're obviously divergent. You can see relative strength has been divergent on this move down. That's an hourly. Let's go over to the 4-hour. There's a risk that we can start popping here. And then if that happens and yields come down, that would actually have a negative effect on like the dollar yen, and maybe some of the yen pairs. But I should also note that Gelos just mentioned that the boons. Here's the boons. The boons are actually, trying to get a foothold too. So if boons are, start to bounce a little bit here, it could have the same effect on, on some of these other markets. You might see the bond markets globally start to firm up a little bit, and that could weigh on some of these yen pairs moving forward. So just some food for thought there. Okay, let's quickly review just some of these majors before Steve should be here any moment. But let's talk a little bit about it. So here's the euro dollar triangle. We're right up against the triangle resistance. Now these triangles, they tend to be continuation patterns. So in other words, the euro is moving higher right now in this triangle. I wouldn't be surprised if we see another, back test of like 124 before a continuation. And maybe that would be going into tomorrow. I don't know if we're going to get a breakout ahead of, non-farm payroll. You never know. But the euro dollar is nudging right up against some resistance here. The cable's been very messy, but you can see that we had a move back up to the 78% retracement in the pound. The pound, as long as we trade above 140, as long as we trade above here, you have to be really careful about being on the short side of the pound, in my opinion. All right, here is the hold on really quick. Sorry, I just had to look at something really fast. Here's the Aussie. As you guys know, the Aussie is broken out of this channel to the downside. That's now a risk for the Aussie, especially if the dollar does manage to find some support at some point. Here is the Kiwi. The Kiwi is still just running up this channel, but if it's about ready to suffer the same fate as the Aussie, because the Aussie is breaking down, perhaps. And this is one thing I should mention with the New Zealand is that a lot of the reasons why the New Zealand is so strong at the moment is because of this massive sell-off that we saw in the Aussie New Zealand since the Australian data 2 days ago, the CPI data. So the Aussie New Zealand has slumped all the way near this major support zone. So if the Aussie New Zealand starts to find buyers down here, that could, the Kiwi could play a little catch up to the Aussie, meaning the Aussie's already broken down. The Kiwi could very easily start, pushing down towards 73 cents, which I think is probably pretty critical for the bulls to hold. The dollar Canadian, as we pointed out, very divergent. It's really held up a lot better than other pairs. It really has. Than a lot of the dollar pairs. I think if we see a dollar rally, it's probably going to appear here first. And here's the Swissy. Swissy is obviously this thing. Oh, by the way, and I'm sure Steve might actually talk about this too. Look at the Euro Swiss. The Euro Swiss, we've broken out of this, you can call it a channel or a wedge or whatever. The Euro Swiss is a pretty good barometer for risk appetite and risk aversion. So if you start to see the Euro Swiss push into new trend lows, that to me would be a signal that the market is starting to look like a little risk off. So just think about that when you're looking. That's why I don't really like to trade the Euro Swiss. I still have a bad taste in my mouth from the Swiss National Bank. I don't like to trade it to the short side. So I just don't. But when it starts to break down, it does kind of signal to me that we need to start being a little bit more cautious in the risk environment globally. All right, going back to
great one.
You
don't have to trade everything for it to give you important information.
Correct, and that's kind of what the Euro Swiss is doing for me right now. It's kind of going, okay, maybe things aren't as as rosy as we would think. Here's the Norwegian krona. By the way, this currency pair is testing some pretty key support, but this is like horizontal support, and I thought we were going to put in a false breakdown, and we might end up still doing that. But for right now, you can see this Norwegian krona. It's walking a pretty. I like to say it's walking a fine line. I mean, bulls are really, if you're bullish, you got to be really careful here, because if the dollar breaks down, it's probably going to break pretty aggressively with the U.S. dollar and Norwegian krona. The flip side is if the dollar actually starts to catch a bid, we might see a bounce here in the U.S. dollar and Norwegian krona that could be pretty wicked as well. That's another thing to think about. Last but not least, I want to talk about the peso. I do still have a long in the peso as long as it stays above the 200-day moving average, but it's actually quite weak this morning. I'm not really too sure why. I was looking around to see if there's any news, but if the market starts to, when I say the market, I'm talking about stocks. If stocks start to feel heavy here and we start to move lower, the emerging market currencies tend to suffer. So the US dollar Mexican peso down here might actually end up being a gift. One of the other things that we could be developing is because this was a push through the 200-day moving average and we got snapped right back up, this can end up being like some sort of inverted head and shoulder pattern. It's a little too early to note. Crap, I didn't want to do that. Hold on. I was going to draw with my pen and I still am. Let me just move this really fast. Okay. What could end up happening here is like, there's a shoulder, head, shoulder. So it's just, if stocks get weak, picking up the US dollar Mexican peso somewhere down here, might actually make some, sense. As the market will be a little bit more apt to sell emerging market currencies. Just some food for thought there. All right, and with that being said, I'm going to pass it over to my colleague Steve Vulgaris. Steve, did I say that correctly?
Come on.
I know. I've only known you for 5 years.
Yeah, 5 years. Yeah, at least.
Wait, say it again. Say it again.
It's Vulgaridis.
Yeah, see, I as an American, I just can't say that.
I know, you can. By the way, Blake, it's a good opportunity to remind people this is the last day that the competition for FX trade is up, right?
That is correct. It is the very last. It's the very last day.
Politics, Steve Rogaldas.
Yeah, today is the very last day. If you haven't cast your vote for us as the best new contributor, please do so. I'm going to actually be tweeting out the link, and you got to vote for Greg Horvat as well. He is selected as best sell side analyst, I think is what
buy side
analyst that he came in, and then obviously us for best new contributor. So I'll be tweeting about that in a little bit later today. Make sure you guys cast your vote if you like what we do. The analysis, then please do. All right. With that being said, Steve, I got to pass it over to you guys. I got data coming out right now.
Go ahead, buddy. Thank you.
Okay, Blake, good luck today, mate. Good luck.
Thank you for that Euro Swiss tutorial. That was valuable.
Pleasure. See you guys.
Hey, Stevie. Let me try it. Vulgaridis.
No, it's Vulgaridis.
Vulgaridis.
Ah, come on, Dale Pinkert.
Let me try. Vulgaridis. Hey,
he's excellent, actually. He goes first.
Stelios, yours is easy, right? It's only 2 syllables.
No, it's not.
Oh, he shortened it. Okay, what's yours, Stel?
Mine is Kondogulas. Don't worry, just call me Stel. Right.
Call you anything. All right.
Okay.
Hey, Steve, don't forget to remind everyone to vote for me on FX Street for having the best former show ever on FX Street.
That's absolutely true. I concur with that. I have made on it.
Right me in.
Absolutely.
Go ahead, guys.
Absolutely. By the way, I wanted to begin by saying that if you remember, we had talked about the Euro Swiss breaking below that ascending wedge.
Yeah.
The boons being ready to test very critical support area, and the DAX, being in this expanding triangles formation.
Yeah.
So the
That's
DAX.
what the Russell's in. There's a lot of megaphones out there. You ever notice that when one pattern emerges, you start to see them in,
over and over again. Yeah, it's because of correlations. Yes, that's very true. What you're saying is very true.
Right.
So the point is that, we're seeing this big move down in the DAX because the DAX has been already like 4% lower within, what is it? 2, 4, 6, 7 trading days, including today. Because simply the Bund, if you see here, is already has already broken actually this huge horizontal support area. And now the only level that's actually left of huge importance is the potential of perhaps finding some support in the channel, this channel. Because if it also breaks below there, that's a huge development in the markets. We're talking about an area, this one, that was holding like for years. We're talking about a super long-term bull trend that we had with the bunds, and that actually says a lot. And this is going to spill over to several markets. Obviously, it's going to have an effect on the euros. We've said it's going to have an effect on the DAX. Euro also has an effect on the DAX, and we can see that here. So I still have my eyes.
I've ever seen, Steve.
Sorry, mate?
I wonder what nation has a flag that long. The weekly on the.
Probably none.
Well, maybe we'll see one at the Olympics, but that is the biggest flag I've ever seen. All right.
And this is what we were showing with the Euro Swiss. Blake showed it again. As you've said many times, ascending wedges are patterns that you might see a full retracement of the pattern, which would be quite lower actually at 112.50. So obviously, we have a lot of elements here that are showing us that, we might have the first signals, the first signs of some kind of risk aversion coming through the markets. Obviously, having to do with stock indices, we still have more to prove here, but it's been a good start. Obviously, this has been so far a bad week. If we go on the weekly chart and we start having a look at weekly charts, first of all, I need to remind that last week the Dow Jones pushed the 261.8% extension of the Great Recession's bear market. So that was also a very nice fib extension. And as you see, we're already getting a large black day on the Dow. The same here in the SPX. Nasdaq.
Steve, they're selling pops instead of buying dips. They're buying the dips still, and they will all the way down. But the action this week, after the State of the Union, the market came in higher. They sold it off. Yesterday, last night, there were some good earnings report. I saw the S&Ps up about 13 handles before I went to bed last night, and here they are down 8.
Indeed.
So it's not trading well. It's not trading well.
Yeah, but we need more time to confirm that. Also, keep in mind
Is that a Greek pitchfork where you have?
That, I've had like for at least 3 years.
It looks like a
Where you
Greek
have what?
pitchfork.
No, it's Andrew's pitchfork.
Because it's got all the forks on it. It has more. Andrew only used 3 prongs. You have.
Yeah, you're right. These are the 200% extensions.
You want to make
These
sure
are
that
actually
that food doesn't fall off your fork. You have 1, 2, 3, 4, 5, 6, 7.
Yeah, you're right. These are median lines, this here, and these are the 200% extensions, which, as you see, have worked very nicely during this whole uptrend. So, we have some signs here. We anyhow had like overbought numbers, that I've never ever seen before in anything than a cryptocurrency. So even some type of a pullback was, the least to say healthy, right? But we need to see follow through to this, because let's be honest, this has been like a massive move higher, and at the very least we should see some retracements unfold. And obviously this is a corrective week, and we need to see, because I cannot call it top here. I'm still short the SPX, but I need to acknowledge that this has been a very strong uptrend. And my initial thinking is that this has to be a correction. Now, if the market shows us that something else is brewing here, that's a totally different story. But in my opinion, the market is going to soon go in by the dip mode, and in a way that's going to be working, unless we get something extra that will spice up things. You know what I mean? So if it happens during these few days that we're correcting lower to get something that's spicy, something that might ruin or sour the risk on appetite, then we might get some signals that this might escalate to something bigger than we currently have. Until then, I'm treating it as corrective. I know that Blake covered it, and if you remember, I made an extensive mention yesterday why I believe that Aussie is still sell on rallies, etc. And we had a long-term conversation, etc. As you see, we've broken below the channel today. I think that the next area of support, if we break below where we're currently testing, is the 78.40, and from there we can see what the intentions of this pair are. So so far so good. I even increased my position being short the Aussie again, and I think that if that high, because that high came at a perfect area, it's a triple area of resistance, quadruple area of resistance actually, where we found the top for the time being. So it's very imperative to see what's going to happen from here. So far so good, as I said, and I like it to the downside. I liked it. I kept my short. I had to trim it whenever we dipped, so I could add higher. It was a painful procedure, but at least I made it in, and now I'm actually in profit. So let's see what's going to happen here. As I said, the levels I'm watching for are 79 is quite an interesting area of support, and after that we go down to 77.40. Having to do with the cable and the euro, I know a lot of people keep asking for them. Nothing has changed since yesterday. I'm still viewing these possibly as flags or pennants or whatever, and another push to the upside for the time being looks more likely than not. Now, the fact that euro and pound have remained quite strong, and on the other hand, we're seeing Aussie not performing that well, has actually finally triggered the inverted head and shoulders formation here. It seemed like it would be invalidated because we got the rejection from the neckline. This is Euro Aussie, by the way, last week. But we held the lows that we've crafted the last time we were working on the shoulder, and we just accelerated higher and we penetrated through there, and we're now testing resistance. But bottom line is that this inverted head and shoulders formation has now been triggered. So now that this has happened, we can measure a target here and see where that tells us that we should go. Okay, and we have a measured target at 157.60, which is roughly, as you see, the recent highs that we had. So the head and shoulders formation says that we should at least retest the high we had in December, at the 1st of December. Okay, so let's see. Let's see what's going to happen from here. It looks good, though. And as I had said plenty of days ago, we held a very critical support area there. Okay, and that's important because the chances that the uptrend is resuming are decently high. Obviously, the Euro Kiwi has not been that good. I'm also seeing here the potential of an inverted head and shoulders formation. I mean, it's all the elements are here. There it is. Right. So same kind of deal, different inclination of the neckline, etc. But sure, why not? It's lagging. The Kiwi perhaps might have some catching up to do with the Aussie. And let's have a look at the pound crosses as well, because I know it's one of the standard things that people ask for the pound and euro crosses. So pound Aussie, there it is. This had a head and shoulders formation here. We had shown it on a 4-hour chart. This played out great on the technical level, having to do with support resistance zones. I mean, we penetrated this resistance zone after multiple tests. We found the next one. We got rejected. We came back to the previous one, tested it as support, accelerated higher. So this looks good as well. I want to remind you that the pound Aussie had also a long-term trend line here, which in essence we just falsely broke below it for one day. Next day we came back and closed above it. So this can be also viewed as a bottoming pattern. We held it, which is obviously good news if you're bullish. And this is the pound Kiwi. Same situation. It had a large bottoming pattern. Also, we just for a sales break lower, and we are currently striving to penetrate through this resistance area. We tested it, we got rejected, we came down, we retested intraday that previous resistance zone of support. Today we're testing that resistance zone once again. Now, bottom line, we're now trapped between these two areas. If we break above this one, I think this one is on its way to new highs as well. So, we're getting more confirmation that these ones are finally working. Okay, because I had said many times that jumping the gun could have been dangerous here, but I think we're getting more and more of a confirmation that these are moving to the right direction. Okay, let's see what kind of questions we have. And please go ahead. And DAX getting crashed. Oh yeah, I just showed it. DAX dump, yes. Would you mind explaining what you mean by squeeze? That was a question for Blake. He means that when positioning is more or less one-sided and you get like a violent move towards the opposite direction of where the vast majority of positioning is, these positions are getting squeezed out. In essence, they're pressured or they're getting stopped, etc. That's what Blake meant. Blake Wise's review that the USD yen will drop with the market when it did not go up with the indexes. Simply, Jason, I know I'm answering for Blake, but I'm pretty sure that I have in mind exactly what he means, because my view is similar. Simply, Jason, obviously, as you mentioned very well, the risk-on correlation having to do with this USD yen has broken down. So when we got risk moving higher, the USD yen stopped moving higher. But what Blake believes is that when we get some true risk aversion again, the other kind of correlation, which is that in risk-off situations, the Swissy gets bid, the yen gets bid. If things are tough, even gold gets bid. This is going to come back, okay? Because it's a very, 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 very crucial correlation for the market. Because keep in mind, take it on the opposite side. many people are using these currencies as funding currencies to buy risky assets. So when you want to get out of them, when you liquidate, you have to switch back to these currencies. So this type of a correlation will and should remain quite strong. That's why he's saying that. And I concur. Steve, you sound great. Glad you're feeling better. Yeah, I'm feeling better, Joe. Thank you very much. Antibiotics did the work. Hi, guys. Would you love to hear your view on the USD INR and the context? Yeah, sure. Let's have a look at it. You asked yesterday as well, and I told you to remind me. I'm going to do so now. The Indian rupee. I have technical analysis somewhere for the Indian rupee, but where is it? Obviously, it's not in this one. Anyhow, we can do it from scratch instead of start searching. Okay. The Indian rupee is obviously moving lower for some time now, but if you look at the big picture here, we really have no strong reason to believe the USD INR, I meant, right? This is not a bearish pattern, right? Just look at how strong the uptrend has been. Just look at it. So, in my opinion, there it is. That was a huge, huge resistance area. Okay. So, in my opinion, this is just a corrective move. This is simply a pennant in a very large uptrend. So, I mean, you know, in such a huge uptrend like the one we had now, obviously, you might take a very big period of time to correct, right? So, it wouldn't surprise me if the move lower ended up being very prolonged, something like this. But this is not an impulsive move, right? Just look at it, especially given the prior uptrend. So in all honesty, if you asked me to close my eyes and open them again and tell you where the Indian rupee is going to be in a couple of years, likely I would say higher. The USD INR, so the Indian rupee lower in comparison to the dollar. We have no signs that, yet, no signal whatsoever that we should take this as anything else than a corrective move. And you can see it. Just look at how massive this move has been. I mean, in 2008, we were at 39. We hit a high almost at 70, right? And we've just retraced a small part of it. I mean, even if we take the last leg higher from 44, this has been a move, a 57% move higher. And so far, the move lower has been 8%. Just think of the analogy, right? So unless we see it accelerate, I don't see it really as bearish. So bottom line, the Indian rupee does not seem to be doing that good in comparison to other emerging market currencies. Okay, that's what I think about it. GBP CAD, sure. Let's have a look at it. Pound CAD. Okay, we haven't adjusted things here for a while. I can see this from my support resistance areas. We had said when we were down there that there is a potential for a move higher. You see, I had traded that successfully to the upside several times, actually, not in this cycle, in the previous one that it was recovering. Haven't traded it in some time now. And we said that it's likely that it was bottoming there once again. And indeed it did. And we have been moving higher since. It has been choppy on occasion. So, you know, I mean, when we had that inverted head and shoulders, we broke above it, we came down, we invalidated it. It was a complicated move higher. And in general, it doesn't look impulsive to me. But that doesn't mean that it cannot move further to the upside. Having said that, keep in mind that this is a resistance area. If you zoom out, you can see how important it has been. We already got rejected once from there. So currently being on resistance, I would advise against trying to buy it here. Okay. If we break above this area, the next serious area of resistance is up at 181. So, there is a good upside potential as long as we manage to clear this. But be careful because, as I said, we're currently testing a big resistance area. Okay. Let me adjust this. 38.2 of the large move lower at 177.30 as well. Now that I see I had marked. There we also had the target of the inverted head and shoulders formation, which doesn't really matter anymore because, okay. So that's it. That's what I see in pound CAD. My pleasure, Sunil. XPD USD, sure. Let's see. And there we go with Palladium. Not only we penetrated this ascending channel, not only we penetrated this ascending channel, but I have to tell you that this move starts looking impulsive to me. 1, 2, 3, 4, 5. So I think there is more coming here. Okay, I think there is more coming here. I would ideally want us to come back, as I drew here, retest the broken blue channel somewhere there, for example, and then resume lower. But I like this type of a move that we've had the past few days because it looks that like it can have some impulsive characteristics. 1,000 is a very important level. If we break below it, I think we get more of a confirmation as well that something bigger having to do with the downside is coming here. Okay, and this might also be showing that gold might even roll over, although they're not so strongly correlated in many occasions. Silver as well, which for the time being have nothing bearish to them. Let me repeat that. I mean, for the time being, I can easily see a rebound from here for gold for another push higher, right? Because we're testing once again this area as support. So we don't have yet confirmation that silver and gold are rolling over. They might produce one more high. But if we do see something like that, I would like to see gold back at 1,300 before looking to the upside again. Okay. So let me see what other questions we have. We have a question about platinum, actually, which is, let me see. Yep, we do. So let's see. XPT USD, if I remember right. Yep. And this is platinum. Platinum has been doing decently well, as you see. Really tricky market. I mean, just look how the platinum market trapped traders, and let's see if it's going to do it a second time, because we had this triangle, especially the triangle's resistance was like massive, because it was a long-term descending trend line. You can see it here if I zoom out. So what we did here, what we saw here in this market was the following, is that platinum actually broke to the downside this trend line. It even broke the previous lows that we had there, only to very violently reverse, right? And then break this very important trend line to the upside. And I have to tell you that this move higher has, quite the impulsive characteristics. And especially given the fact that we had a false break here, false breaks usually very good indicators of the opposite direction, right? I would tell you that as long as this trend line holds here, platinum looks good. And you know something now that I think about it. Yeah, this is a ratio now that I made platinum with gold. Because this has been, just look at it. If you remember, platinum was considered like by far, a better metal than gold. Look at this. Back in 2008, platinum was valued 2.4 times gold, as you see here. And since then, this has been a continuous downtrend without respite, right? And at some point, I remember we were discussing this in the fund I'm working with, that at some point, this will have to reverse once again and see platinum overperform. And you know something? I do see here this being a potential. You see it? After such a huge downtrend, this is a very nice descending wedge. So if we hold this in this ratio, I think platinum will look like a very decent buy against gold. I know that nobody asked about it, but regardless. Can we check out Euro yen? Yeah, absolutely.
Steve,
Yes, Elio.
I just one little note. I'm sure many people are aware of it. Platinum, in terms of abundance, is rarer than gold, but there has been the problem with platinum in the last few years is the use in the diesel car industry, where it was. I mean, I don't know the details. I'm not a specialist, but it was heavily used in diesel cars. I think anyway in some components. And now they're being phased off. major cities are saying we don't want to have any diesel cars by 2020 or whatever it is. So I think that's a big hit.
Absolutely, but look at the platinum gold ratio. How lower than that can it go?
Oh yeah, I agree. I remember when I got married 5 years ago, I wanted to make a ring. It was going to be gold or platinum. Platinum was double the 2012, double the price, literally. Now it's lower, bad trade.
Yeah, and look at it now.
Yeah.
Which one did you buy?
I got the platinum one. Yeah, bad trade.
He's a cheap bastard. He got her a plastic one.
What is the market in cubic zirconium nowadays?
I have no clue.
Listen, guys, I have an interview in 2 minutes. Just giving you a heads
Absolutely,
up.
which means that it gives us enough time to have a look at Euro yen.
Yeah,
and here we go. Euro yen testing this triangle's resistance once again. It even tested earlier today that high that we had. So I'm going to tell you that, if we actually close above it, I think likely another push perhaps towards 161.8, quite likely. So for the time being, you have no reason to be bearish. At least, through my eyes. Okay. Can you please double check gold symmetric triangle 1 hour and 4 hour? Sure, I'm going to check the 4 hour. Platinum also being recycled out of catalytors. Yep, George said. Maybe she can use the ring as a muffler, says Ziggy. Okay.
Nice.
Let's see the 4 hour chart on gold. Let's go down to the 4 hour chart. There we go. Okay, you're seeing it, you're viewing it symmetrical triangle, you're saying symmetrical. I'm guessing. Oh, you mean the little one here? Probably you mean the little one here if I go down to 1 hour chart. Yeah, sure, but something in general, as you see, gold is consolidating at the moment. So we can, we can figure out a lot of consolidation patterns here, but bottom line, if we break below 1325, we're moving lower. Until then, this can easily end up being like a bullish consolidation. That's what I think. And I want to see gold moving further to the downside first, because that was my original thesis. So there's no question about it. But we still don't have the evidence that it has rolled over. Okay. So I think probably until the end of the week, we will know what's happening from here. As I said, another push to the upside looks to me at the moment more likely scenario than not. Okay. So who do we have for an interview today, Dale? Who's your guest? Dale? Dale?
From what I know, we have Ozgur Hatipoglu, a neighbor of ours. Steve is from Turkey, I think.
Okay, nice.
But we need to find Dale first.
Okay, guys, I'm back. Yeah, so
Here he is.
He did us a favor, stepped up to pinch hit for Yogi. And, Yogi Berra was a great baseball player. So, Oscar, I'm going to make you the presenter now. And want to thank you so much for being a trading warrior brother and coming in to address our community today. So I'm passing you the baton, live from Turkey, Ozgur Hatipoglu.
Hatipoglu.
Hi, Dale.
Hi, Oscar. How are you, buddy?
Good, good. I see it's the first time I join you guys here, but it seems like you guys are doing a fantastic job here.
Oh, thank you so much. Yeah, some people call us a dream. So, really, I'm glad I reached out to you on Twitter. I think it was over a tweet on crude oil, and you were skeptical of the market. But before we start getting to some of your instruments, and it looks like you trade with a great Saxo's, one of the finest out there. You could tell them I think so. And I'd like to know how long you have been trading. Maybe we could start there and go back in a time machine to tell us what your journey was like, how you first got involved in trading markets.
Absolutely. I started trading Forex in 2005. After I had my master's degree in California.
Oh yeah, where were you in California?
Long Beach. Beautiful place.
All right. Yes, I know it. I live in Southern California.
Yeah, where?
I'm in Temecula, just a little east of San Diego.
All right. Yeah.
Okay.
Yeah.
What did you get your master's? What did you get your master's? What degree?
Come again there. Degree, finance and management. I double majored in both.
Okay.
And then worked in the States for an extra year, and then came back to Istanbul. Okay. And I worked in different private banking departments of banks and all that stuff. And I excelled in options on futures, a bit of Forex, a lot of futures, some stocks, ETFs, and all that stuff.
Okay. So your degree, after a while of being out there in the real world, when you leave the university setting, really there wasn't anything that was as appealing as the markets. You were attracted to the markets right away.
Well, yeah, I mean, you don't get to learn all that stuff at school or at university in any kind of academy.
No.
It's just by practice, and most of the times it comes with a high cost. I mean, if you don't lose money, you don't learn, right?
So let me ask you this. Are you pretty much self-taught, or did you have maybe a mentor who took you under their wing, or a book or something that was a big influence on your trading? I see you have candlesticks on your setup, and looks like some type of, before you had some pivots, and now I'm seeing all kinds of things. So you look at a lot of different things. Right. Who influenced you?
Well, basically, where I first started working was this local forex company owned by an Asian gentleman in Pasadena, and then we moved to Newport Beach. So there they taught us how to do technical analysis, but that was just a 101, right? And then I studied a lot myself about the technical analysis, and then a bit of fundamentals. And then I actually gave up on studying the indicators and focused more on formations, like harmonic formations. And then I figured that options are a good way to make money. Well, frankly, not to lose money, I would say.
All right. Well, let me ask you. Okay, buying them or selling them?
Well, I am mostly a seller, but it depends on the situation, though. But most of the times, I'm a seller. I collect premium.
Right.
But for example, for tomorrow, with the NFP number coming out, the best play for euro-dollar traders would be by options. Like there are options on futures that expire tomorrow, so they will offer.
Wow, you play expiration poker.
Pardon?
You play expiration poker.
Well, I don't do that, but I sometimes talk about that with people. I'm mostly a seller.
Okay. Yeah, you know, that's where all the money is made, being the house. You know, I have an expression on options, that options are like relationships. 90% of them expire worthless. I've bought a few. How do you protect yourself when you're a writer? Because I've also seen people where, you know, it's like picking up quarters off the sidewalk, that most of the time you're just going to collect the premium, but every once in a while you're going to have an outsized move that's going to challenge your strike. How do you protect yourself as an option writer?
There is no way getting away from getting ahead once in a while, but when that happens, if I figure out that it's going to hit me, I kind of roll my position. Let's say, looking at this oil chart, let's say I'm selling let's say 67 calls, which is too close for me to sell. I actually go far further out of the money, but just for an example, let's say I sold 67 calls and it's going up. What happens is I buy it back, and then how much, depending on how much loss I have booked, I try to get that back from the market by selling another option. So basically, I roll it to another strike.
Okay.
That's my motive.
Okay. All right. Well, at least you have some type of strategy. So what do you use for forecasting directionality, and what's your view on crude that we're looking at right now? Technically, how does it look?
Yeah, of course, charts are lovely. There's no one, I don't know anyone who doesn't look at the charts, and I look at the charts too. But my major drive are more of the fundamental side, and the CFTC Commitment of Traders report, because those are the big guys that rule the market. And currently, there's a very interesting situation for oil in the market. We're at record longs, but that may happen, and record long is a bull game. But what could be a bear game is the ratio, the long-short ratio of the large speculators is right now it's at 14.17, and last week it was at just above 16. That's a record value too, which means
you were betting the commercials would be right, correct? They're pretty short, aren't they?
The commercials are the hedgers. I'm actually looking at the funds, managed money.
Okay.
Mm-hmm. So
just because
managed money has 16 longs for each short they carry. That's a record number, and it's not easy to sustain. So
it's over exuberance, and you're fading it.
Come again?
It's over exuberance, at that ratio, too much enthusiasm, too much bullishness, and you think you're looking at that as a contrarian indicator, and that's why you're selling.
Very true. Especially when you put this ratio chart. When you put the price on this ratio chart, even when before the big plunge in 2014, this ratio was around 15. And 2 weeks ago, or last week, it was about 15, where the price was almost a half of what it was in 2014. So this again shows us the situation is not sustainable. So it is likely that we're going to see some sliding oil down to around 60 levels. Why I say 60, Dale, is not because I'm looking at the charts.
It's because of the open interest of the 60 calls.
Pardon?
Just a guess. That it's the open interest on the 60 calls, and you think they're going to fry them, and they're going to become
that's
more.
That's a good way of looking at it. That's called option paying. Well, I'm not looking at single options, but I'm looking at cumulatively. And as you said, most of the options that are purchased, once they're held to expiry, like 85–90% of them expire worthless, and that doesn't happen by chance. The market sees how many positions, roughly, of course, roughly, how many positions there are on what strike. So market drives it to a point that option holders will lose the money. So there's a way to calculate this. And upon my calculations, with the options that expire 13 days later, this number comes up as $60. It doesn't necessarily have to hit $60, but anything that comes close to $60 is going to make option buyers lose the largest amount of money, which means whoever drives the market will make that money, will gain that money.
Right.
So in 2 weeks' time, I believe we're going to see oil prices coming down a little bit, but that's not going to be permanent, I guess, because the main driver again here is the IPO Aramco, Saudi Aramco. You know, the main catalyst when evaluating this company is the oil price. So the higher the oil price, the higher share value will be the producer's stock. So until the IPO, I guess we're going to see some elevated oil price. But after that, it should be, I think it's going to be good to come down.
Can you hear me? I'm curious. Can you hear me?
Oh, yeah, right now I can.
Oh, okay. So the Saudis want a higher price for the IPO. So maybe that's pretty obvious. Do you know if they have it scheduled? It's still not scheduled, is it?
They're trying to find a good exchange where they can do it successfully.
They want like $70–80 to do it, I think. So maybe we have some conflict with Iran and they get 100. Let me ask you this. We have a similar setup in the COT positioning with record longs in euro, and we have for quite some time. What are the options telling you in euro?
Well, I am also looking at the euro positioning.
Are you selling like 125, 126 calls up here?
Let me see, just 1 sec. Okay, we are at the record all-time high net longs here. Even when the price was around 160s in 2008 and 9, the net long number was around 120K. And right now we're about 145K long positions. So, and the price is much lower than what it was before compared to 2008 and 9. So this is too many long positions, but not such a strong pricing. So one of them is lying. And given the interest rate differential between German bonds and US Treasuries, if you ask me, my opinion is the price is lying. So
it's been lying for what? It's been lying for about 9 cents already, or what?
Come again, I can't hear you.
Okay, well, we've had these positions. I remember everyone commenting on it when the euro was trading under 120, and a lot of people were fading euro strength under 120 because of the COT. You know, we've rallied another 4 handles or so. Why now is it any different than it was, say, a month or 2 ago? It's gotten more extreme.
Well, what is really driving the market is unknown to me. It is more of not the euro strength, but the dollar weakness. It's about the dollar index.
Mm-hmm. You have a view on that? Do you have a view on the Dixie?
Yeah, I guess I do. Just one sec.
And a technical opinion of it?
Absolutely, just one sec.
Okay.
I'm going to squeeze this.
Okay, so you have that. You use fibs too. You use everything except indicators. Anything you could draw on the chart.
From time to time, you can't do it without indicators.
Yeah.
There's a pretty strong cluster here.
Right. Lots of confluence.
See? And I can extend as well, and you see all this, price movement, little price movements here. So right now we're in an area where potentially dollar index will respond and that it's going to go up to somewhere about 90, and that's when there is going to be a good correction in the market, in the currency market, in favor of dollars for every major.
Okay. You're saying if the Dixie closes above 90, that's going to be a trigger, a catalyst for a further dollar rally.
Yes, I see it that way.
Okay. What else is on your radar?
Well, I have, I'll show this to you. Soybean.
Oh, you trade the grains too. Okay.
Yeah. Look, these guys undervalued for quite a long time because of the high supplies.
Right.
But if you look at the S&P for equity versus commodities ratio,
right.
This ratio has been way low for a long time, and it's been in favor of equities. And I think we could be near time-wise, we could be getting close to a correction in favor of commodities. So this is one thing. Also, I have some long positions in.
This is the bean oil?
Wheat and corn.
Soybean oil?
Soybean oil, yes. Soybean oil too.
Okay.
Also, every now and then I trade coffee and cocoa futures because they're trading in ranges and they give pretty good profit.
Do you miss California?
Well, life is life. I mean, it depends on how you take life. Back there, I was not married. I was single, and I had a good and fast life.
Yeah.
And then I came here, and a couple of years I got married. Now I'm father to 3 kids.
Okay.
That's another life, and I love it.
Those are very long-term positions.
Oh yeah. Hell yeah.
The longest term position you could take. Maybe not always with husbands and wives, but you're always a father and a mother. So you can't find an option with a longer expiration date than being a father.
That's true.
What do you think of that?
Of course. That's my kids are my biggest investments, and I hope they turn out to be good people.
Do you want them to learn how to trade?
No, well, I want them to know the value of money and how to manage their money, but I don't want them to be a trader. It's too stressful. That's why I'm not trading forex. Well, I am seldomly trading forex, but I'm mostly trading options.
Okay. Okay. Well, I really want to thank you for coming in. Anything you want to share? And what's interesting is you don't have any business model. You're not. Or do you teach people how to trade, or mentor people, or just strictly trade your account?
Well, I'm actually working for an investment house, and through my career, I have lectured lots of people about risk management and options and futures, all these calculations and all that stuff. And I still can't do it, but it's not, and there's nothing scheduled yet. But I'll be happy to be, I'm very happy to be here, and I'll be happy if you invite me again.
Thank you very much. I appreciate it, Oscar, that you came in today, and very interesting take on how you use option markets for a guide for direction and sentiment. I wish you good luck on, I think you're going to be in great shape selling those oil calls. I think the hedgers will get it back to that price you're talking about. And very interesting conversation, and glad that our paths cross. I want to thank you very much, and like it or not, you're now my trading warrior brother.
All right. Thank you very much for having me over.
Okay, Oscar. Take care. Good hunting, and may pips rain down on you. Okay?
Thank you. Thank you very much.
All right, buddy. Okay, that's a wrap. His Twitter is the same as his name. OZGURHATIPOGLU. Got that, Michael? Okay. See everyone tomorrow for NFP. Remember, don't just count your pips, count your blessings. See you all tomorrow. Adios.